Good evening, Professor. Good evening, class. My name is Vincent, and this is my partial submission to our weekly discussion for Accounting 429, Federal Income Taxation. This week, we're talking about S corporations and their tax liabilities. In specific, I'm going to answer regarding the stockholders' basis prompt. So I'm going to answer three questions. Number one is how a stockholder's tax basis is computed. Secondly, how is it reported? And thirdly, I'm going to address certain questions or certain answers to the actual prompt given for the weekly topic discussion. Hope you guys enjoyed the presentation, and I hope this will help clarify the impact of income, expense, loss, deduction, and distributions, and how the overall impact basically on computing the stockholders' tax basis. So how is a stockholder's tax basis computed? Well, it's simple. You take the initial capital contribution or the cost of the stock, then you add any income, and you deduct any loss, deduction, or distribution. This gives you the stockholder's tax basis. Basically, any income will increase the tax basis, and any loss, deduction, or distribution will decrease the basis. So how is increases and decreases on basis reported? You're basically reporting everything on a Schedule K1. Let's break it down into two parts. Let's talk about the increases first. When you're reporting an increase in basis, you're reporting it in box 1, which is an ordinary income increase, and then you're reporting the stated income items on box 2 through 10. In box 16A and 16B, you're taking the tax exempt income and you're reporting it there. And in box 15C, you're reporting the excess and depletion. Now, for reporting the decrease in basis, you fairly follow the same format, but it varies a little bit. Now, a loss is reported on, or decreases, is reported on box 1 of a Schedule K1. On box 2 through 14, in specific, 2 through 12O and 14P and 14Q, as per the IRS website, obviously, you're reporting the stated income loss items. The non-deductible expenses are reported on box 16C, and the non-dividend distributions are reported on box 16 David. Box 17R will have your depletion for oils and gases. Again, this whole thing goes back to incomes will increase the basis of, while losses, deductions, and distributions will decrease the tax basis. So to answer the prompt this week, for each of the following independent statements, we are to identify and indicate whether this transaction will increase, decrease, or have no effect on the basis of a shareholder's stock in an S corporation. So short-term capital gain being the key word, will increase the basis. It's an income. Section 1231 gain is also an income, will increase the tax basis. Separately computed income, obviously, keyword again, income, will increase the tax basis. Non-taxable return of capital distributions by the corporation will increase the tax basis. And finally, depreciation recapture on income will increase the tax basis. So to address how a shareholder can claim a loss, a shareholder basically has to, before a shareholder can claim a pass-through loss, they must basically meet 3 loss limitations first: the stock and debt basis limitations, the at-risk limitations, and the passive activity limitations. So if a shareholder allocates an item to an S corp as a loss or a deduction, as per the IRS, he or she must meet adequate stock or debt basis to claim that loss or deduction item, meaning the shareholder to enable for a shareholder to claim a loss or determine if the distribution is taxable or not, he or she needs to demonstrate whether they have an adequate stock basis. If if the shareholders' basis for their stock, if the shareholder disposes their stock through sale, the basis needs to be adjusted and established in order to reflect that gain or that loss. Once this is established, a loss or deduction or distribution will basically decrease the basis. Well, I hope this clarified or helped clarify some things about stockholders' tax basis. The information from my research and to my answers to these prompts were cited from the IRS website, in particular the S Corporation stocks and debt basis. As always, I hope you guys stay well and be safe out there.